Hey, ready to dive into Apollo Tyres Q3 FY25 earnings? I saw their investor presentation and the press release about their unaudited financial results.
Absolutely. Apollo Tyres, right? They're one of the big names in the tire industry, making tires for everything from trucks and buses to passenger vehicles. It looks like they've been focusing on expanding in both India and Europe. Let's see what the numbers tell us. Disclaimer: we advise investors to check with certified experts before taking any investment decisions.
Okay, so kicking things off, the presentation mentions a consolidated revenue of 69,280 million rupees for the quarter. That's a 5% year-on-year increase, which sounds pretty decent, right?
Yeah, a 5% increase isn't bad at all. However, their EBITDA took a hit, coming in at 9,470 million rupees, which is a 21.6% drop compared to last year. And that brings their EBITDA margin down to 13.7%. That's a significant decrease of 465 basis points year on year.
Ouch, that margin compression is something to note. Anything in the report about why the margins are down?
Well, the presentation points to steep raw material inflation, about 15% year on year, as a major factor impacting those margins.
Right, raw materials can really squeeze profitability. What about their year-to-date performance? Is it a similar story?
To a degree, yeah. Their YTD revenue is 196,998 million rupees, which is a 3% increase. But the YTD EBITDA is 27,342 million rupees, a 20% decrease. And the EBITDA margin is down to 13.9%.
So, revenue growth, but profitability is taking a hit. What's their strategy to combat this?
It seems they're focusing on business fundamentals, cost control, and generating free cash flow. The usual playbook when facing headwinds.
Makes sense. I saw a bit about their revenue mix too, right? How's that looking?
Right, so for the YTD consolidated revenue, truck and bus tires make up 41%, passenger vehicle tires are 39%, and then you've got farm and off-highway at 9%, light truck at 6%, and others at 6%. Replacement tires are a big chunk at 81%, with OEM making up the remaining 19%.
Okay, so replacement tires are really driving their revenue. How does this break down in just India?
Good question. Standalone in India, truck and bus tires are even more dominant at 55%. Passenger vehicles are 24%. Farm is 6%. Light commercial vehicles are 8%, and others are 8%. Replacement is 64%, OEM is 23%, and exports account for 13%.
Interesting shift, with exports playing a bigger role in the standalone numbers. And geographically, how are they split?
Regionally, for the consolidated revenue, APMEA, Asia Pacific, Middle East, and Africa, is 67%. Europe is 30%, and other regions make up the remaining 3%.
Got it. So, a strong presence in APMEA. What about capacity utilization?
In India, capacity utilization is at 79%, while in Europe, it's a bit higher at 76%.
Okay, so there's room to grow in both regions. How are they performing in different segments in India?
Well, they've seen good year-on-year growth in the replacement segment for truck and bus radial TBR tires, passenger car radial PCR tires, and farm tires. They've also gained market share in the PCR replacement segment and seen a 45% growth in Vredestein volumes.
Wow, 45% growth in Vredestein volumes is impressive. That must be helping. What about the OEM segment?
The OEM segment has been soft, particularly in the commercial vehicle CV segment, impacted by a decline in vehicle production and an unfavorable mix.
That makes sense given the broader economic conditions. What about the European operations?
In Europe, their volume growth in the PCT, passenger car tire segment, was lower than overall industry growth. However, they've outperformed in the more profitable segments like winter tires and UHP, ultra high performance tires.
So, focusing on the higher margin stuff. Are they seeing that premiumization strategy pay off?
Absolutely. Their UHP mix for the quarter stood at 48% compared to 43% in the same quarter last year. They are also gaining fitments in marquee German brands in the PCR OEM segment.
That's great to see. High-end cars needing high-end tires, right? And how are the margins in Europe despite the raw material pressures?
Despite a 4% year-on-year increase in raw material costs, they've reported an 18% operating margin for the quarter, That's a 290 basis point increase quarter on quarter, but still down 260 basis points year on year.
Okay, so improved sequentially, but still below last year. What about their cash flow and balance sheet?
Their net debt decreased by 4.5 billion rupees compared to the previous quarter, primarily due to lower short-term borrowings. They also saw a marginal decline in long-term debt.
That's a positive sign. Reducing debt is always good. What's their net debt to EBITDA ratio?
It's at 0.7x, which is quite healthy, shows they're managing their debt well in relation to their earnings.
Definitely. How about their capital expenditure? Are they still investing in growth?
But their capex for FY24 was 3 billion rupees, and for the first half of FY25, it's at 2.6 billion rupees. So still investing, but perhaps at a slightly moderated pace.
Okay, makes sense given the margin pressures. And free cash flow?
Their free cash flow was negative 1 billion rupees in FY24, but has improved to negative 10 billion rupees in the first half of FY25.
Right, they're clearly managing their finances cautiously. Any word on dividends?
No specific dividend announcements in this presentation. However, it's worth keeping an eye out for any announcements, including the record date and payment date, as those are key for investors.
Absolutely, those dates are crucial. So, overall, what's your take on Apollo Tyres' performance this quarter?
Well, they're showing revenue growth, but struggling with profitability due to raw material inflation. They're focusing on premiumization, cost control, and cash flow generation, which are good moves. Their debt levels are manageable, and they're still investing in the business.
So, a mixed bag, but with a clear strategy to navigate the challenges.
Exactly. They need to continue focusing on those premium segments and cost efficiencies to improve those margins. It's like learning to adapt a recipe when you're missing some key ingredients.
Nice analogy. So, what should investors watch out for in the coming quarters?
Keep an eye on raw material prices, their ability to maintain and grow those premium segment volumes, and any further debt reduction. Any updates on their dividend policy would also be significant for shareholders.
Right, those will be the key indicators of their future performance. Hey, if you're enjoying this analysis, please like and share this video and subscribe for more deep dives.
Definitely. And remember to always do your own research and consult with a financial advisor before making any investment decisions.
Absolutely. Thanks for breaking down Apollo Tyres' earnings with me.